All right, first up, let's talk about corn. Got the 4-hour bars here. The market's drifting a little bit lower to start the week. We're seeing a lack of trading enthusiasm, as traders are kind of waiting for Monday's key USDA grain and stock acreage report. Right now, corn in the U.S. is the cheapest globally, but tariff concerns with the biggest buyers like Mexico, Canada, and China still holding the market back here. So, is this acreage going to push us below 450, or are we going to see a nice run up to 480? In Texas, corn planting is already 45% complete, with 23% of it emerged. And over the week, Texas is expected to get some good precipitation, except for the panhandle. However, Brazil's weather is a concern as dry conditions persist in the southern region, particularly Rio Grande do Sul. Dr. Cardonier has lowered his Brazil corn crop estimate to 122 million tons, citing disappointing first crop yields. On the second hand, on the other hand, Mexico is projecting to increase its corn production, which could help balance things out in the market. But still, we're still having big crops out of the South and, expected another big crop out of the U.S. For the U.S., the USDA is expecting to have the USDA report ending stocks at 1.516 billion bushels. That's down from February's estimate. The has had a quiet start with prices kind of quietly drifting below last week's low on the May contract. There's still, we have uncertainty with U.S. tariffs, especially with Trump's recent comments about imposing a 25% tariff on any country buying Venezuelan crude oil, which directly targets China, the top buyer of Venezuela crude. Oil. So soybean talks between U.S. and China are set to start this week, but it's unlikely that any quick breakthroughs will be made. Meanwhile, Brazil's soybean harvest is 77% complete. But Ag Rule has lowered their production forecast, still 159 and 166 million tons, down from USDA's 169, but still record crop there. The weather in Brazil has been hot and dry, particularly in Rio Grande do Sul, so where the yields are disappointing. So the palm oil market is also seeing a decline in exports, with March exports down 8.5% compared to February. With tariff uncertainty, the Brazilian harvest nearing its end, U.S. weather is not having a major impact. We're likely to see sideways and low volatility in soybeans throughout next week, unless we get a little shake up here or a surprise out of the stock and acreage. All right, so we'd kind of find itself on the struggle bus here on the last half of March. Despite some crop stress in the U.S. plains, potential revival in the Black Sea grain initiative is kind of weighing on prices here a little bit here. Especially with ongoing talks in Saudi Arabia about Ukraine. There's also some positive signs like forecasts for participation in parts of the Black Sea region and southern plains of the U.S. Areas like Oklahoma and Texas panhandles and much of Kansas are still expected to remain dry. So we also had crop conditions for wheat. Kansas was up 1% on the good to excellent. Oklahoma dropped 9%. The USDA report of Mexico's wheat production shows a significant drop, with 40% decreases expected for the 2025-26 crop. Meanwhile, Russia wheat prices are rising up a little bit here this week, putting some pressure on U.S. wheat prices. Meanwhile, concerns about HRW crop remain. The current weather conditions and potential Black Sea grain deal revival are the main factors impacting the wheat grain market. So there you have it. Here's the latest on corn, beans, and wheat. As always,